Where's my coffee? Where's my water? Check 1, 2. Check 1, 2. Spy a little weak right here. I'm trying to close the gap on the downside. 604. PC, not as bad. Oh, underneath the surface, it's claiming that wages are not keeping up. We'll look at that data today together. I like switch. I've got like morning, how are y'all doing? Check, check. Good morning. How are you all doing this morning? Hope you're all doing well. I have 2 showers in my house. One of them is really nice, and it's like a Japanese spa. If you've never seen a Japanese spa, it's kind of nice. It's got like the toilet that fucking blows air up your ass, and it's got this big giant walk-in shower. You just walk into it or whatever. It's got like heaters and music and all this other nonsense. Warm tile racks, but I don't ever get to use it. It's got this like plunge bucket for cold water to push over or roll over yourself with a separate water supply while you're in a hot shower. Doesn't have the steamer. I had the steamer, but I didn't install it. But in that shower, I've got a really nice straight edge. And then I take a shower. I normally take a shower in like the second bathroom. Kids and the wife use that shit. So this morning I went in to take a nice like therapeutic shower, right? And I got my straight razor in that shower. And I'm like cutting my face up. I think I got the safety razor going. I was just like, fuck. It's like blood coming down my face this morning, and I'm like, God damn it. And someone recommended a Norelco One Blade or something. That thing's been awesome. Like I use that all the time to keep the scruff off, and then I use a safety razor in my other shower. But then I don't use my straight edge ever anymore. So when I get to it, I'm like, oh yeah, I'm just gonna fuck around with my. I got like cuts all over my face this morning. Don't do that. If you're gonna use a straight razor, you've got to use it every day. At any rate, good morning out there. It's Friday. Happy Friday. Hope you're all doing well. PCE was in line this morning. You got to remember too, like the Fed funds rates, gambling. So it's like knee-jerk stuff. But then you also had this morning Bowman making some claims about the data that I don't know if that's true or not. I have to look into it. But even her fear was kind of misfounded at this point. Last time I looked at wage growth, it was in line with inflation. So I'm going to have to look today and see what these numbers are saying. She was making some commentary about maybe she was saying wage inflation was higher, which is negative for the market. That means you're making too much money for But I don't think that's what she said. I don't have it in front of me right now. I think what she's saying is that inflation is rising and wages are not rising with that inflation. But we'll go over that together today. Wage inflation, though, is still a lot like inflation. When inflation ramped, wages went right with it. So we'll take a look at it this morning. I still don't think, last time I looked at it, it looked relatively in line. So she might be talking about a tick. And if that's the case, it's only one metric and it doesn't make a story. You need 3 months of data specifically like that to even really make a difference. Fucking traders want cuts, man. They'll use any excuse. Like one small fucking data point and all of a sudden we're cutting again, which I fucking highly doubt right now. So we'll look at that today if we have a chance. Let's get into the market really quick before open. It's 9:24 here. Give me a quick second here. So last night was another late night. I was in the Discord, and I was in the Discord. Well, first we have a lot of new members. We have a lot of people coming in right now, and then we have some newer people. We got like new people, and then some newish people. We have some training videos on the website, but I got some DMs asking me to explain briefs and all that kind of stuff, and then last night someone mentioned 0 dates. So we're on this show, and I say this publicly all the time. Mostly the intent of this show in particular, just the show itself, is to lure in traders that lose all their money with day trading every day, and then we get them into the group, into our community, teach them how to actually make money. And so last night someone had said, "Don't do those FDs that Cap does." And I'm like, yeah, of course. Like, you're not going to make money off FDs. Well, you make money off FDs, but you're using money that comes from profit. You're not using that to build an account. Well, you can use that to build an account if you did it like 30, 40 times or something like that. You might build enough money to build an account. You have to go back to work every week. You can do that with weeklies and all kinds of shit. There's a bunch of different ways to build an account. Call spreads, that kind of stuff. Buying stock, you can build an account. Depending on your time frame and what you want to do to build an account. But that's not how you make money. I mean, that's money that you make elsewhere. And I sit here all day long, and people want to trade at all times of the day. People show up here, hey, I'm off of work, or hey, I'm off of school, or hey, I'm fucking bored. Let's do some gambling. You know what I mean? So you can't really look at the show as, hey, I'm going to create an account with that money. There's no way that's ever going to work. It doesn't work. That's why you guys trade futures through prop firms, right? And if you do make money, you have to move it. Like, there's a whole nother process in this. So even if you are making money, you have to move that money into less risk based investing or trading, or remove it even from the market, put it into real estate, hard assets that appreciate, stuff like that. So, but in that conversation last night in the chat, where people were talking, and I said, you know what I'm going to do? I was like, let's chat about the briefs. I'm like, I want to do, we have a lot of new people, so I'm like, well, we'll do a private stream for the briefs. And I think people read the briefs and relate them to day trading, and they shouldn't. So, and I wonder what people do when they read the briefs. Like, how are they interpreting them? How do they look at them? And how do they apply them to trading? And sometimes I think that if I draw something that's like, if I'm like, yeah, it's going to go up, right? But I don't show you that it's going to go down in a day or two. It's just bullish, right? And then the other thing is, if I'm drawing something that maybe looks bullish, like, it's up, or it's only going up that much, but then it's coming down this much, they're like, oh, Cap's bearish, right? It's like, Cap's bearish. He's only got us going up a few ticks. But I'm super bullish right here. And I'm like, no. This is actually bullish, in my view. Or it's looking out to be bullish to buy, or you should be looking here, not so much here. You shouldn't be caring about this. You should be caring more about this always, looking ahead to where the pullbacks are. And I want to talk about that briefly this morning if I can, because I talked about it last night, but I want to be, Alexa, be quiet. I want to be more clear about this topic because if we're either on different time frames, we're either in an uptrend or a downtrend, right? You could call it accumulation and distribution. You could say we're turning up or we're turning down. Doesn't matter. We just need to know that on whatever time frame you're on, right? So we're in a bull market, right? Just base case. We are in a bull market. That means that we're turning up in general, right? The market is turning up. Then if you go to a year, are we turning up? Are we turning down? Right? Are we accumulating to turn up? Are we turning down and trying to distribute, trying to get out of positions? And then you work that all the way down into smaller time frames. Now, when you're thinking about that stuff, specifically last night, what I wanted to talk about was, let's look at, we're going to look at SPY really quick. So let me just get rid of all these expectations and stuff. We're going to go to the trigger screen right here. Yeah, this one. So we're going to go to an hourly basis. We're just going to look at this right here. And we were discussing this in a brief, or how do I write a brief? Why do I write the brief a certain way? What am I accounting for when I write a brief? And I account for all these different things. I account for traditional charting. I account for gamma. I account for velocity and triggers. I account for ICT. The ICT stuff is like fair value gaps and, where's it cheap? Where's shit cheap, right? Basically. And then Elliott wave stuff, right? And try to figure out where everybody is. Like, are these people over here? Are these people over here? Are these people over here? And what are they doing? And if there are concentrations of all of those things, those are large points of interest. If there isn't, we can have failures and breakdowns. So an example would be you have yourself, let's say, a bull flag, right? Come up here with price, and you 1, right, 2, right, something like that. And you're like, hey, it's going to break out, bro. And instead it fails. But you don't know that there's negative momentum coming down above, right? With traditional charting. So you're like, why does that fail? Because you had negative momentum, right? So you want to know where everything is, right? Like who's on first, who's on second, who's on third. Now the secondary thing would be when I'm writing these briefs, I'm actually very bullish here, right? But saying that I'm very bullish here, like momentum looks good, gamma is improving, that kind of stuff. But then I'm telling you, yeah, we fail this and we come down here, and you're like, oh, cap's bearish by saying that. But truth be told, no, it's more of you have FOMOers that want just that little bit. That's all they're in for. Just that right there. In reality, you have a corrective move that's begun, right? I always like to see 3 corrective moves: 1 down, 1 up, and then 1 down. Whether it's a sharp correction or a sideways correction, right? A flat, they call it a flat correction. It's either a flat or it's going to be a sharp. You don't know which one it's going to be, but I always like to see those movements, right? Before we have continuation to the upside. Think about that for a second. So, especially in these briefs right now, I've only seen 1, right? 1, 2, I haven't seen 3 yet. So what does that mean if I've only seen 3? So I'm going to draw 1 here, 1 there, right? I'm going to make that like thick. I've only seen 1. You're going to have some people say things like, oh, well, this is 1, 2, and this is your flat, right? And that's your 3. 1, 2, 3, right? Something like that. So I don't know if that's done yet or not, but for me, I see these gaps down below over here, right? Down here in 86. Show you this. There's a little gap down here. There's another tiny gap right here, I believe, on like a 4 hour or 1 day or something like that. There's like some gaps left behind over here, some slop. So if I think we're going to do this one right here, it doesn't really matter if it's, it doesn't really matter if it's, it doesn't really matter if it's starts over here. It doesn't matter if it starts up here. It doesn't matter. We're coming back to get this, more than likely. And the real continuation is later. Okay? That thing looks like shit, but you get the point, right? You get the gist here. Let me redraw that. So, do I care about this little bit right here? No. And there's a reason why. Oh, damn it. There's a reason why I really don't care about this. How long this takes. What really matters is if I'm giving you a brief, and I'm like, yeah, you know, down here, you know, if it fails early, that sucks, doesn't it? If it fails up here, and I keep thinking there's going to be a continuation, and then eventually I get trapped. It's like a fallacy, right? So our base case is SPY turning down? And the answer is no, it's turning up, right? It's an accumulation to go higher. But you always, in the market or a stock turning up, prefer to buy dips. So are you long from here to here? No. You either need to have already been long here, or you're looking for dips to buy. So you're kind of like sitting to the side. Whether you have to wait a day, whether you have to wait 2 days, you know, there's always like, oh, you know, we're never coming back, bro. It's only going to be, you know, up. And that's never the case, is it? We walked in, we knew about this drop coming, right? You and I all knew about this. We didn't know about the December one, did we? That was like a sure thing. And all of a sudden we bloodbathed, right? In December. Remember that right here? Everything's looking great. 86% chance of a second holiday trade from the last 2 weeks of December to the first week of January. And look what happened. Just when you say it can't happen, it does, right? You wait, and all of a sudden, boom, drop. And this was everybody, the whole market was saying, we're going to ramp, super ramp into the end of the year. It's going to be a wall of just go. Everyone's on the same side of the boat. Wham, down it goes. There's your dip buy. So when you read these briefs that you get at nighttime, you want to be looking for, you know, you want to be buying pullbacks. Always be buying pullbacks. Very important to buy pullbacks and to be looking for that pullback because you get caught, right? Boom, blow up your account. You don't even need to be trading zero dates for that. And I saw some discussion about selling options, selling calls, selling puts and stuff like that, cash secured puts and selling puts. So if you're selling puts or anything for, let's say, middle of February or April or late March or even mid-July, you have to still think about, like, do I want to own this, right? If you have to roll a position or you're going to get assigned on a position or something like that, you got to look at where the lows are, right? Where should you be selling puts? Dates to be getting out and opportunities to buy. I guess you could buy SPY. You'd get a cheaper entry down here and sell puts on the hope that we go higher. That works too. You know, if you bought some SPY or cash secured put, not knowing if we're going to go down here or not, you'd get a discount on selling puts from down here if you rolled those puts out in time. Under those circumstances, but you should be looking over here, right? If you're going to get some calls or call spreads down lower, right? Preferring to add to positions lower. And you also get this, like, you get this nice little, you know, that nice little inverted, or, you know, like whatever the fuck this thing is over here. right? This inverted head and shoulders and shit like that for your traditional guys out there. So you're just being patient. And I am too. Like as a matter of fact, we just had this we just had a bunch of tech reports, right? So you got a couple squeezes, and then you get a couple that roll down, right? You get Tesla went down briefly. Microsoft went down. So a bunch of put sellers, what do? They get assigned, don't they? So now they're owners of Microsoft. So I go in, I buy some Microsoft, I start selling puts lower, right? To doom bears. So anyways, when you're reading those reports, they're not like bearish or bullish, or there's no real such thing as bullish. Just or bearish or bullish. You're just looking for opportunities to get long. Make sense? We'll talk more about this. We could do is let me see if I can let me call my wife. We might be able to do something. Give me the morning. I gotta ask my wife to maybe give me her account or something like that. I'll talk more about it here in just a minute. Okay, so let's talk about this morning, our expectation. We'll start off with expectations for this morning. We're going to let this open up for just a minute. Let's start with, there's all-time highs right here, 610.76. One quick second here. Sorry, I'm really tired. Like this whole week, I've slept like 4 or 5 hours a night, at max. I was working last night until like 2 in the morning. I was up this morning at 6 a.m. Uh, 6,300 in SPX, possible by Feb 14. I did an outlook last night with members, Chase, on a private stream. Why don't you join why don't you join the why don't you become a supporter? Why don't you just join the Discord? I don't know why you don't just join the Discord, man. Because like people discuss this shit 24 hours a day in our Discord, brother. We got bears in there too, Chase. We got bears in there, man. You can get down in there. Okay, so let's ease up here. Are we going here? Like Chase, like you're going to be given an opportunity between now and Feb 14 to buy a dip. I assure you, man. Like everyone's like the mentality of people is fucking weird. DIA, right? Dow Jones. You ever notice like Dow Jones front runs moves and then they trade sideways while like SPY and Qs are going up? You ever notice that shit? Like Dow Jones underperforms, then it like front runs. I'm not opposed to that trade on DIA as they rotate into risk and they get off the old man shit. TLT is another weird one right now. Like TLT is like it's not like negative, but if you see like Qs going up, and if you see like TLT closing anything out, it should rise when the pump is done each day or every 2-3 days or whatever. Like you get like a manipulation Monday and Tuesdays, and all of a sudden TLT is running. You can get like a cherry on top trade for that too, by the way, because there's still flows going in to they're not great flows, but they're supportive flows into treasuries still, even though money flow is shifting to the stock market. Huh? What do you mean may go up and all this? What are you talking about? I don't know. Chase, I don't even know what the fuck you're talking about. What are you talking? Dude, just get into the Discord, man. Just get inside Discord, meet like John L. or like Condor or all the old fucks. Can just chill, man. Oh shit! Now we're fucking we're running the wheel. 45's running the wheel. Yeah, I saw BTSG. Winky, I saw BTSG. Do you guys want to do 45 Forever says selling calls right now? We could do that. We could run the wheel. You guys want to run the wheel? You guys want to do cash secured puts or something? We could do that. That'd be fun. It'd be boring as fuck for the show, but it's dirt cheap. You can try it out. If you don't like it, you just tell me I want my money back. I think it's like $28 a month if you sign up for the year. It's got premium tools from BB Bot, Trady Ticks, Unusual Whales. People trade all kinds of shit in there. The community is fucking awesome. They all get along. They all come from all kinds of different backgrounds. Like they still get along. They like keep it pretty legit in there. We have some cool. Just the tools alone are worth it if you want to sign up for other services. If you're like, I don't even need community or whatever. I think that alone. We do briefs every night. We do updates. You get some other cool shit and a bunch of cool. You get a bunch of cool shit, I guess. If you don't like it, you just write me an email and say you suck. I don't like you. Give me my money back. I'll give it back to you. Just 1 month. How about this? This is what we'll do. Seeing as I got the trying to lure in all the degens. Do you guys want to do a? Do you guys want to do? We're at the right time of year right now. I'm accumulating right now, so I'm like buying like stocks and ETFs and shit to sell options on. I got to be a little bit more careful what I do this year. Like where it's like thematically, or my thesis this year is there should be some volatility, but the way is still higher. But I am aware of the risk to the market. Rubner said that yesterday, right? Keep yourself hedged if you have exposure long in the market. Not zero dates. You own the market. You got to hedge yourself one way or another, right? Rate bear ratio spreads, or buy cheap ass puts because they're dirt ass cheap. Like they're dirt. They're worthless right now. So, and I got puts on for today. I've had them on for 2 days now, but protecting my longs, making sure they're going up. Matter of fact, Microsoft's up this morning. I'm pretty happy about that. And I got some other problems though too. I got to think about because I own like USO, and there were no tariffs put on by Trump as of yet. Blah blah blah. I got some TLT longs, stuff like that. I got a bunch of crap long, but we could do that because like this ER season is a time for like selling calls on rips and selling puts on failures of ER, right? So like Microsoft's a prime example. It failed. You go in, you swoop in, and you buy some underlying. If you had sold puts, you'd be assigned, right? In rolling. So there's already buyers there, right? So at any rate, we could do that. We could do like we talk to my wife and see if I can. How much money you guys? Let me have to do a poll. If you're a poor trader, How much money could you start with? $1,000, 2,500, 5,000, or 10,000. What you guys? What's being poor today? What's anybody out there? Give me an idea of what's. I don't know. I go to a job every day and I got no money and I blow up my account every month. What up, Will? How you doing, brother? Good to see you, my man. Anybody? Nobody wants to say what's poor these days. $1,000, Jesus Christ. You'd have to do like cash secured puts. Then you couldn't buy, stonk, and sell. They're still gonna hold the money though for the cash secured puts. $1,000. We can sell like one put on SPY maybe. Okay. $1,000. Some of you guys only have $1,000. All right. 25,000, $2,000. If you get 25 grand, you don't need me. Can you guys cough up in your own accounts like $2,500 or something? It's a little bit better. A little bit more ability to. You don't have $1,000 in your account? Oh, fuck me. We could do it on like we could sell a really the problem with like here's where you run into the problem is if you're like selling like shitcodes and stuff, you get trapped in that shit, you're fucked. That's how you lose money. How about this? Let me ask a guy that knows better than me. How much money to start selling options on SPY or a poor trader? He's gonna say $1,000, I think. I think it would be $2,500 would be better. Maybe even $5,000. How much money to start selling options on SPY for a poor trader? How about this? Trader, if they committed more money from a paycheck on payday for a few weeks, payday for a month or two. Let's ask John L. See what he has to say about that. Yeah, if you've got a small account, you don't want to be dicking around with shitcodes. Or even like high beta shit. Like you can, I guess. I mean, you can max out. Like, hey, there's still a problem there. Like, if you have a small account, like this is the idea, right? Like let's say like we just had that news about NVDA. It took a nosedive, right? Like if that was real, NVDA could have been fucked like the rest of the year, and you're trapped. You're fuck you. Had you done it, and just if you had like synthetically traded it through Qs would probably come back, right? You know what I'm saying by that? It's like if you're just trying to grow an account, and you're like, I want to do it because calls and puts are way overpriced. Like Tesla's the same way. But if you ever get trapped in one of those fucking things, you're in it. I'll see you in a year. Bye. That's one of the problems with the wheel. People get really like greedy and shit. They don't tell you that. They also don't tell you about when you go from a bull to a bear market. how you can get fucking strung up for like a year too. Well, again, you can. I guess rolling helps, but they'll argue that you can roll all that shit. That's true to an extent. Dairy Doug says 3 years ago I started a 1K account just running the wheel. Currently at $2,600. Slow and boring, but good percentage returns. Yeah, you don't really lose theoretically, right? Theoretically, you'd never lose your money. That's what I find that like how I do things is slightly different, but I do sell options sometimes. Discord link is giving you an error message. Did you sign up with your Discord name? Or are you in the Discord and you can't see anything? Mike. Mike Pagorsh, can you do me a favor? Can you send me an email and I will get it fixed for you right now. Send an email to my personal email address. It's WSBGAWD at gmail.com. And I'll expedite it for you right now. Just ping me. Yeah, I mean, there's all kinds of ways of making money. My problem that I used to run the wheel. Like when I ran the wheel, I felt like I needed a lot of time for it to manage it. And then I had a lot of free time to do it, but I don't have that time right now to manage that stuff. I'd be willing to sell like puts, because we're in a bull market. I'd be willing to sell puts and stuff, with you or something like that. NQ back to the scene of the deep shit crime, gap filled. How about this? I'll put $2,500 on a separate account for safe account building, and we'll do that together, something like that. I got to talk to my wife. Let me text her real quick. Yeah, me too. Me too, Winky. I'd be way richer, dude, if I wasn't streaming. I have my winning has gone down dramatically since streaming. You just get fucking bored. I get bored. I get super bored. Okay. Um, Looks like John L's sleeping. It's early out there, right? It's like 6 a.m. out there. That motherfucker's still in bed sleeping. We'll see if John L will answer us later this morning, because he's in a different time zone. Oh, all right. Hold on here. I got the email. I got your Mike. I got your brother. Hold on here. Just getting error messages. Did that work? All right, I got the team on it right now for you. Okay, Mike, I got you covered, brother. All right, let's talk about today and sorry. Let's give a couple things here. Okay, let's talk about some stuff here. If you had the brief from last night, you pretty much got an expectations for next week, right? You're able to see how the market dynamics are playing out right now. You got most of the bull case. There was some bear stuff that we highlighted as well. So if you're bearish or you think we're going to crash or something like that, I did highlight a few parts of that, but not too deeply. I can go over that today if you want. If you want to talk about gold, why is gold going so high? Winky this morning made some commentary about banks maxing out right now, where they really they begin to sell. We always know that risk on starts with what? Banks, usually financials. That's where the risk on comes into play. We know Rubner said, yeah, you probably got 2 weeks of up. And then be careful the last 2 weeks of Feb. I don't like that. My only misgivings on Rubner saying that is we get everybody on the same side of the fucking boat and like all of FinTwit's talking about it and all that kind of shit. Hey, good morning, Chris. How are you, brother? Good to see you. So what we're going to do is this. We're going to go over some of the market dynamics today. It's the last day of the month. We are beginning to look for an exit of volatility. It should be a bumpy ride, though. We are also having a little bit of a grip of gamma coming off today, and then we get a large grip of gamma coming off the 3rd, 7th, or something like that. So the market's free to move, beginning to become free to move. One other note here, too, is we're so close to all-time highs. What happens when we get all-time highs? We get a pullback, right? All-time highs is very close, right up here. We also have a little bit of resistance on this 4-hour. You can already see it, right? Bump and grind. We've got, let's see, pivots. R2 stands at 609.98. I'd be very careful up there. So right there is what you're looking for. It being a Friday, if we go high in the morning, it's usually till about 10:30, 11. It gets risky as we come into the 12:30 to 1:30 portion of the afternoon, right? Hold on here. We either dump the open on Fridays typically, like right away, or we start green barring it up till about 2/3 of the way through the day. Fairly common. Another thing too here on SPOOs is if we were going to dump early in the morning on this back test, you would have seen the back test immediately fail. Whenever that back test on, like if we were looking at an hourly candle right now, you're going to find the hourly candle building here to crank us to the upside. Also, know we have the half-an-hour trigger above the hourly trigger, which is quite bullish. We'll go to the trigger screen really quick. Come on, right there. Just give it to me. Half an hour has a little bit more push left in it. Hourly has a little bit more left to go in it. So I'd tell you, first part of the day is probably quite bullish here. So if you're getting bulled up for a Friday, looks pretty good to me. And look at that. We're already starting to pop up and squeeze. Nice. So if you're like, hey, are we bullish here in the opening bell? Yes, we are. We had a nice little back test right here. You might also see, get that squeeze up there like that. And then always be using these supports to come back off and on again. Something like that. God, those are so I hate they look so ugly. And we'll also snap some time frames in for when the sellers like to swoop in the morning, right? Wham, right there. Buy the open, sell the open, right? This is this is your option sellers, believe it or not. There we go. Hey, JT just arrived. What up, JT? Okay. So we got some targets. We have an all-time high up here. We got one more thing to look at here as a group. One important thing, which is gamma. Give me one quick second. Trying to get to this as quickly as possible. We are currently breaking above 6,100. That is good news. When we are breaking below 6030 and 6,000, CTAs and COTs become amplification for the sell side. As we begin to break above 6,100, it triggers CTAs, COTs, long short funds, you name it, to chase and become trend followers. We are now breaking above 6,100, or currently. We also have a giant bar of gamma that is beginning to come into their expiries. Like, we got some on today, we got some on it next week. We got two big expiries for 6,100 next week. And then we've also got a larger expiry, I think on the 7th or something like that. So we've got a lot of this gamma expiring. They have destroyed basically 6,100 calls. Put simply, I guess. Bottom right-hand screen right here. This is what I want. This is important because you're probably thinking we're going to continue to squeeze. Now this resistance is weakening. This was the call wall. And now we get some targets above, some new targets. The call wall goes higher. I don't see anything up there, but your call wall is now 61.65. This resistance is weak, but it's still resistance. So here's your upside target. Look at this. You got a nice little snappy snap over here. Whoop. Right up there, right? Call wall right there. A little bit of resistance right there. Gamma flip is lower, and this becomes local support. This is attempting to turn into local support. It still isn't. It's about right here. But they're trying to make it local support, so you're looking for price to come up. Make its way up like that. Can you see that? And we're also instigating trend followers. So you got supportive flows to go higher at this point. Still resistant. You ever notice how you get the failure and then we roll down? It's nasty. I'm going to read some more to you about gamma. We're going to also go back to this main screen here. I'm going to pull this one down here a little bit. Right about there. Try to get that one up there. Matching up with gamma. We know there's some resistance here. $10 a.m. So this is your right here. This is your support. This is your 6100 on SPX. We need that to hold. If we don't hold this, we're going to bloodbath down. Close all this gap down below. This is it right here. This is support. That's it. I'm going to read to you some information on as the market dynamics are changing. The focus is on the, this is from Gamma Labs. The focus is on the micro on Friday and particularly on mega cap growth stocks. Within that complex, which is trading 1% higher on aggregate, Apple is up 4.3%, while Visa is up 1.6%. As both companies beat top-line expectations. Apple beat EPS expectations by 5 cents and reported inline revs. iPhone sales missed estimates, while services and wearables revenue was in line. China revenue declined, but overall Q2 revenue guidance is in line with consensus. Visa beat EPS by 9 cents and rev expectations provided positive Q2 and fiscal year 2025 guidance. NVDA is trading 0.3% lower pre-market, meanwhile recovering from a much steeper decline, as investors are not convinced how to trade recent developments. Quantify the impact on the company. According to a report from Bloomberg, the U.S. is investigating if DeepSeek received NVIDIA chips from Singapore. Of course they did. According to a note from Rubner, GS, so other people are commenting on this. BBG commented on it yesterday. A whole bunch of people were pushing the Rubner story. According to a note, and Rubner's a bear, by the way, if you don't know that. Rubner, Goldman Sachs, which included the above chart, which I gave to you in the brief last night, I think. There is strong demand for buying market tips right now, driven by retail traders, corporations, and retirement funds. This is part of the usual January effect, where markets start the year strong. However, this trend is expected to slow down by mid-Feb. He plans to turn bearish on February 16th. And I think we have an expiry on the 14th. Don't hold me to that, but I think we got one on the 14th and then 17th. So make sure you're wrapping up your bets before you even get there. There are some flows expected, like major flows at the end of 10 days. So we could see a squeeze up at the end of this run, maybe not today, or massive buying into those, into that like 16th area. What else we got here? We got a little bit more to go here. Here's SPX Gamma. Let me see if I can bring this up for you guys so you can see it. There's another little bump coming up right about there. You don't see that? So you can see that right there. Can you guys see that? That helps. We're getting close. What else? I'm going to read a story to you from BBG. This is a bear story. I got to read this to you just for the risk, why you stay hedged. Currently, and you should be hedged. If you're along this market this year, you should be hedged. I'm going to warn you of that. We've talked about this. We talked about this leading into the new year, and the month of January. We discussed this already. There was an interesting article. Something extraordinary is taking place in the gold vaults below Manhattan. There was an interesting article overnight in the otherwise conservative and establishmentarian Financial Times, perhaps best known over the past decade for religiously keeping its readers out of the best performing asset class of all time, Bitcoin in particular, and crypto in general, which have been relentlessly and constantly bashed with fanatical obsession by all of its now former FT Alphaville writers whose track record of picking trades leaves Jim Cramer in the dust. While normally the FT does not bother with reports about gold, and certainly not global flows of gold, this time it made an exception, observing that in recent months there has been an unprecedented shortage of bullion in London, which, as a reminder for new readers, is ground central of the LBMA, which stands for London Bullion Market Association. As a result of which, the wait to withdraw bullion stored in Bank of England's vaults has risen from a few days to between 4 and 8 weeks, according to people familiar with the process, as the central bank struggles to keep up with demand. People can't get their hands on gold because so much has been shipped to New York, and the rest is stuck in the queue, said one industry executive. Liquidity in the London market has been diminished. This in turn has resulted in a historic flight, literally, of physical gold out of London and into the U.S., where it has been parked in various LBMA vaults, whose weekly inventory updates can be found here, courtesy of the CME. The FT's thesis is that LBMA physical gold has fled the UK market for two reasons: fears of Trump admin tariffs and transatlantic price arbitrage, i.e., the shipments are also the result of higher prices on the futures exchange in New York than in the cash market in London. The unusual arbitrage opportunity has incentivized traders to send the metal across the Atlantic. Let's take these on one by one. First, the FT itself admits that it's actually not Trump's tariffs that are the cause for this unprecedented flow, and the Nikkei-owned publication is merely guessing, to wit. Traders say the shipments are intended to avoid tariffs on bullion that fear could be introduced by U.S. President Donald Trump, but Trump has yet to spell out his trade policy and has not specifically mentioned a duty on bullion, although he has threatened to impose wide-ranging tariffs on U.S. imports. The whole point of Trump's tariffs, i.e., his view of trade and his statecraft agenda, is to encourage domestic production and to reposition global trade flows so that the U.S. benefits. None of that is applicable to gold, since the U.S. is at best the fifth biggest producer in the world behind China, Russia, Australia, and Canada. And no amount of sanctions or tariffs can change how much gold any given mine can produce. Trump knows this. More importantly, traders know this and admit that the fear of tariffs has nothing to do with the unprecedented shortage of gold in London and the sudden flood of physical gold in New York. In fact, the Financial Times itself hints at this. The movement of gold needed to make its way into New York. That is basically what has been driving stockpiling, said Joe Cavatoni, market strategist at the World Gold Council. That is leading a lot of people to say, we want to get ahead of it, and that is driving the futures market into a premium. However, Cavatini said he was cautiously optimistic that the coming tariffs would most likely not apply to bullion. We are, quote, we are not getting a sense from the rhetoric that the administration that it intends to go after the monetary metals, he said. Indeed, it won't, but that won't stop the FT from doubling down on this claim. There is another major point which the Financial Times conveniently ignores. Global flows of physical gold out of London are almost entirely in an eastern direction, with the bulk of commercial physical gold eventually ending up in China by way of Switzerland. According to customs data, Switzerland imports about 1,000 tons a year of London gold, where it is refined in various Swiss mints and redirected to retail markets, primarily in China, and to a lesser extent in India. This is what we highlighted months ago in our December report titled, China is secretly buying up massive amounts of gold. 10 times more than officially reported, which used Goldman data to show just how much more gold than officially reported China was buying up in the London over-the-counter markets. Indeed, as shown below, China undisclosed purchases in the London OTC market hit an all-time high in late 2024 and continue to this day. To be sure, it hasn't been just China. Ever since the U.S. decided to make gold bugs around the world very rich by weaponizing the U.S. dollar in the aftermath of the Ukraine war, there has been a five-fold surge in central bank gold demand, resulting in gold hitting a record high price of $2,800 yesterday. But while every central bank has been rushing to buy gold, nobody has been aggressive as China. So if anyone, clearly not the Financial Times, really wants to find where all that physical London gold has gone, look to Switzerland. But most of all, look to China, which has been gobbling up every last ounce of physical it can find for reasons which are still not entirely known, even if they are becoming clearer with every passing day. And if they aren't, if you look at a chart from April of last year, they will realize why that is. But certainly, don't blame the U.S., which received far less, or about 200 to 400 tons of London gold per year, by siphoning away the LBMA physical. That, however, is not to say that physical gold isn't being stored in the U.S. On the contrary, one look at the activity in the various COMEX gold vaults underneath New York, and one will find something unprecedented, or rather something seen just once. In the aftermath of the COVID collapse, which nearly shut down the world and sparked a historic $30 trillion fiscal and monetary stimulus, a total MBA gold and monthly change, what it shows is that starting in November, the month when Trump won, and accelerating exponentially since, the amount of gold stockpiled in the vaults that make up the COMEX system has exploded at a pace last seen in March of 2020. While regular readers are familiar with the topic of COMEX gold, when we obsessed over it back in 2012 and 2014, and when we closely tracked every weekly update to uncover who the huge and mysterious agent was soaking up as much of the world's physical gold was, before we learned that it was, as expected, China. New readers can keep day-to-day tabs on COMEX gold, which at the CME, which breaks down the market by gold user and by the vault. In other words, in terms of physical seniority, registers at the top, the eligible is toward the bottom, and then to make things more convoluted, you also have pledged gold, which, as the name implies, is vaulted gold used to margin collateral against some of the other bond obligation. Another notable factoid about the rather unique gold market is that, unlike paper finance, where you don't have physical delivery, since stocks are not commodities, COMEX gold futures are physically deliverable contracts which are capable of being settled in real gold. That said, in 2018, for example, COMEX gold deliveries totaled just 1.6 million ounces. Blah, 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 blah. In other words, gold just sits there, so one would hope if one owns said gold. But perhaps what is more remarkable is that those vaults, this massive gold accumulation, is taking place in. While there are currently 9 companies in the COMEX system, up from 4 a decade ago, 6 of these are tiny. Indeed, the bulk of activity takes place in 3 vaults. HSBC, JPM, and something else I can't read. So looking at just the big 3, whose 25 million troy ounces in gold vault holdings represent more than 82% of all COMEX inventory, we find the following stunning picture. An unprecedented scramble to park physical gold, and nowhere more so than at the JPM vault. Putting it all together, starting in late 2024 and accelerating in December, especially January, there's been a panic scramble to store physical gold in the COMEX vault system located almost entirely deep under New York. Recently, there are small new vaults in Delaware at the same time as China has been soaking up all the physical gold London and Switzerland have in inventory. This is cumulated in the biggest gold price spread between LBMA and COMEX gold futures since the COVID crash. And since much of the formerly freely available gold is now underground in New York, where the actual shortage is, it's no wonder why the price of gold futures in the U.S. is much higher than in London. And it has nothing to do with Trump's tariffs. But while the FT is wrong about Trump's tariffs, it is right about one thing. It says that many market participants compare the current U.S. gold rush with the situation during the COVID pandemic, when lockdowns and uncertainty over shipments of gold triggered a surge in stockpiling on COMEX. That certainly is true. The only question is, whereas in March 2020, when the end of capitalism seemed nigh, and when only the Fed buying junk bond ETFs kickstarted the Western financial system, but not before sparking a historic rush to park as much gold as possible in safe places. There was a clear and present reason for the record gold stockpiling. This time the question is, what is it that has spooked the world's savviest investors to suddenly park as much gold in vaults some 100 feet below Manhattan as they did when the world was ending? God, the fucking bear case. So let me ask you out there, if you have a bear case, is it to just pay out that physical gold? Or is it to just cover the paper gold? Is it tariff fears? Is it hostilities with China and Taiwan? Is it bird flu? So at any rate, we're back to the levels of gold being stored in the U.S. as we were when we crashed during COVID. Is it the coming depression? Are we in 1928? We're going to ramp this stuff up for 2 years and then we're going to finally realize all those tariffs like Hoover? Let me know in the chat, if you're a gold bug, what you think. Is it just unassuaged fear? We're almost coming into a new high here at 1030. Be very aware that sellers love to sell 1030. They love it. Remember, we've been mooning all night long, so. I'm bullish. I am bullish. So I guess I'm with Jem on this. I think someone commented at the end of last year that Jem was in line with my expectations. Larry Williams is bullish too. GS is bullish. Remember too, if you go back and look at 1928 and 1929, it was straight up. 2 straight years of vertical. Well, he kind of took that off, didn't he? Trump was fascinating yesterday. He removed the volatility of tariffs. Well, not all of it, but he removed some of the volatility left over through the weekend by pre-announcing tariffs. We finally got the knee-jerk reaction, which we were expecting, but it's not over the weekend. And if he's able to not lay any tariffs on, we could even squeeze more over the weekend, couldn't we? The only way we don't squeeze over the weekend as we right-tail this shit would be if he gets slighted because he's a petty motherfucker. Like somebody tells him to go fuck himself. You could see like doom and gloom. Like, oh, that's not 25%, it's 50. We're doing oil too. Something like that. But he's certainly set us up for a squeeze by removing some of that volatility, because that's what we're looking at, right? We were looking at data points. After today, we were looking at data points and just the unknowns with Trump. So he kind of removed some of that stuff by pre-announcing those tariffs. I'm very happy he did that. And that just removes a bunch of shit here. There should be no surprise. Even if we get any downside from it, it's something that's being priced in right now, or it's already priced in, but and 25% is nothing. If you look back on the modern presidents, going back to like 2008, 2010, they've all been slowly adding tariffs. The curve is like just gradually we keep doing it. Every president, Democrats, Republicans, Trump just uses it as rhetoric, right? Stumping. He doesn't just politicize it, but he uses it to throw everybody into a tizzy. Even the tariffs that Trump put on his last presidency, Biden didn't remove those. He left them on. What else here? I want to put that out for you if you're a bear. That's like one of the bear cases that's going on right now that we're actually near a top. What else do I have here? Let's see what else we got here. I'll read this to you. I think this might be more doom. This is from UBS. I think the resiliency in AI power has caught everyone by surprise. People have been saying the DeepSeek news should be viewed more as a speed bump versus crashing into a wall, but it's still crazy to think that by the end of the week, the independent power producers could get back near to where they were prior to Monday's bloodbath. While investors still feel comfortable about the power demand runway for the next 5 years, the big outstanding question that remains is, will power companies still sign these 20-year PPAs when the longer-term visibility of power needs post-2030 is less clear now with more efficiencies? Taking a look at high-touch flows, Thursday marks the third day in a row. There's been real demand across IPPs, but still nothing in size. It looks like retail has been incremental dip buyers. For example, there weren't large inflows on the retail desk in Vista Corp until Tuesday, and the stock has been rebounding ever since. There's a spike in the Vista retail flow chart below, which has refreshed as of Wednesday's close. Interesting, the retail desk saw 100 million of inflows into NVDA on Tuesday when the stock rebounded. Then retail turned net sellers on Wednesday, and the stock finished down. Wouldn't be surprised to hear that desk is a net seller intraday. That was last night. Let's see what else I got here. NVIDIA managed to put in a big hammer candle yesterday. This stock loves reversing with the classic hammer candle. Just note that. We had some people commenting that in the Discord last night that we're at bottom with NVDA. Keep on squeezing, baby. Come on up. Come on up. Reaching right now to the next little bit of resistance up here. About to tag it here in just a few moments. There's SPX Gamma right there. Should see a little pullback in here. We can get back up here into that. Maybe that's better. Draw it like that, maybe. If you have any questions on NVIDIA with that hammer candle, us being at the bottom with NVDA, just do a search in the search bar in Discord and you'll see the discussion on NVDA. Vulnerable shorts. Post Monday's AI sell-off, long positions have become cleaner as risky longs were sold off. Monday saw the highest net selling since September 2024, driven by long liquidations. In January, short sales in U.S. equities outpassed long buys by a ratio of 10 to 1. The ratio has sharply decreased and is now in line with the one-year average, indicating bearish sentiment. Which is good for a turn up, by the way. That means you buy, you go long. You don't know that. What else do I have here? Don't see anything politics-wise. Nothing from Punchbowl. Looks like it's quiet on Punchbowl. I don't see anything crazy from Trump. Nothing from Punchbowl, nothing from Trump. What else do we have here? We got the Gamma stuff for you. We'll go over some data stuff here. Goolsby is just going bananas right now. Or not right now, but was just going bananas earlier. Lots of rhetoric from Fed speakers this morning. U.S. core PCE index year over year, actual 2.8. The forecast was 2.8. The previous was 2.8. That's in line. U.S. core PCE price index month over month, 0.2. Forecast was 0.2. Previous was 0.1. U.S. consumer spending month over month, 0.7, baby. Forecast was 0.5. The previous was 0.4. Remember how you guys are telling me the consumer's hurting? You guys have been telling me that for weeks now. I'm trying to tell you you're fucking wrong. Consumers are partying like rock stars. So that's all good to see. U.S. PCE price index month over month actual 0.3, forecast 0.3, in line. U.S. personal income month over month 0.4, forecast 0.4, previous 0.3. U.S. employment costs actual 0.9, forecast 0.9, all in line. That's all good. U.S. personal consumption month over month 0.4. That's a little hot. Forecast was 0.3. You guys are spending money. Fed's Bowman, current policy is in a good place for the Fed to monitor data and be clear on economic impact of Trump administration policies before moving rates again. Fed's Bowman goes on to say it's not clear monetary policy is exerting much pressure on the economy, with easy financial conditions and high asset prices possibly slowing progress on inflation. Running it hot, right? People got money, they're spending money. Lying to you, telling you that they can't buy eggs. Fed's Bowman, the labor market is not especially tight. This is something negative, but wage growth is still inconsistent with 2% inflation target. Fed Bowman, I'm watching long-term treasury yields as possible sign markets are expecting tighter policy will be needed to control inflation. We got it loose right now, baby. What else we got here? Fed's Bowman, rate cuts still expected this year, but future moves should be cautious and gradual with time to assess data. U.S. short-term interest rate futures lower after inflation data. Traders continue to see the next Fed rate cut in June. Let me tell you something right now. Some of you out there are looking for a market top, right? Top of the market. You've been calling it since last February. Then you called it in November. Then you called it in December. Then you called it in fucking January. What is a sign of deteriorating financial conditions? Multiple cuts, right? The data suggested, or the data was in velocity to the upside or downside from COVID. And then when all that shit reversed, it was coming into line, either up or downside. They gave you 50 BPS to arrest that data. That's what it was meant to do. Right? And they're like, oh, look at the yields, but they're long-term yields, right? Not short-term. So it's healthy, right? Shows sign of a healthy economy. And we've now paused cutting. Think about that. We have paused. We have language from the Fed saying we paused cutting. That is a sign of what? Strong economy. Make sense? We're not rushing to cut more. That's a sign of we've broken something, right? We just haven't been told yet. So where are we today trading? 609.26. What else we got here? Boy, Mexico is crying right now about 25%. About 25% tariffs. Canada freaking out right now about tariffs. Goolsby going on a rant this morning. What else we got here? Swing by Wolf and see what he's doing. Our drunken sailors partied massively in Q4. Propped up GDP growth, debt to GDP ratio worsened to 121.8%. Hold on here. Our drunken sailors, as we've come to call them lovingly and facetiously, had a blast at the party in Q4. Consumer spending jumped by an annualized rate of 4.2% in Q4. Adjusted for inflation, the biggest increase since Q1 2023. So while we are consuming that everybody is scared of tariffs and everybody's scared of Trump policy and everybody's scared of this and everybody's scared of China, everybody's scared. They were also partying. They splurged massively on goods, especially motor vehicles. We saw that, right? We saw the bounce in used cars, especially motor vehicles and recreational goods. And they also splurged on services, and they accounted for over 69% of GDP. Right? We all took off for the holidays. We went skiing, right? You saw Captain Jim James sent you guys pictures of everything I was doing, right? Everybody's out there having a grand old time. Christmas was good. People had presents, right? They splurged massively on goods, especially motor vehicles. You know that I bought my daughter a car. I think in November or October I bought her a car, right? That was the bottom of the used car market. And their massive spending propped up GDP growth despite the drop in private domestic investment and the drag posed by the change in private inventories. GDP adjusted for inflation, real GDP grew by an annualized rate of 2.3% in Q4, compared to the growth rates of 3.1% in Q3 and 3.0% in Q2 and 1.6% in Q1, according to the Bureau of Economic Analysis today. By major category adjusted for inflation, hold on here, we got to do something. You may want to try to take a little bit off up here if you have a chance. You done good, pig. A little bit more right up here. Gets a little bit more risky as we come up here. And we're noticing inflation popping up its head a little bit, right? By major category, adjusted for inflation and annual rates, consumer spending made up 69% of GDP. Right? Remember you guys were reading stories? Oh, the consumer's taking on too much debt right now. Crashed the stock market. Gross private domestic and a sharp acceleration from prior quarters, fastest growth since Q1 2023. They contributed 2.2% of the 2.3% GDP growth. Gross private domestic investment, 18% of GDP, minus 5.6% after 6 quarters of increases. It subtracted 1.03 percentage points from GDP growth. Government consumption and investment, 17% of GDP, is up 2.5%. A deceleration from the prior 2 quarters. Federal government plus 3.2, state and local government plus 2%. It contributed to 0.42 percentage points to GDP growth. Change in private inventories dragged on GDP. This form of investment subtracted 0.93 percentage points from GDP growth. Net exports, exports minus imports, roughly unchanged at near record levels. Imports drag on GDP. Exports add to GDP. Annual real GDP for the whole year, 2024, inflation adjusted but not seasonally adjusted and not an annual rate, grew by 2.8%, driven by consumer spending, which also grew by 2.8%. This annual real GDP growth of 2.8% was well above the 15-year average growth of 2.4%, despite the highest interest rates the economy faced in decades. With short-term rates above 5.4% for much of the year. Hang tight, I got to do something here, guys. Give me just one moment here, okay? I'll be right back with you guys. Sorry about that. I had something to deal with on outside here. Time is right now. That's 10:30, 11. 11:30. Just note as we come into 12:30 to 1:30. Look at this. Where's 12:30? Jesus Christ, what is that up there? Whew. Just take a quick peek here. Here's all-time highs. Just taking a look back over here. Started rolling in here, right? Started rolling in here. Just right up in this zone. Here's your all-time high. Here is R3 at 613.41. We also have natural rejection on 10. So I want you to just take a quick look at this with me here. We're in cash market, right? So you get 610 right here. That's also R2. There's known supply up here, right? Call wall up here. We can go up here, but if we did, there should still be like rejection at that 610, and then see if we can grab the end of the day up there. I don't know if we will. It's Friday. It is Friday, and we're getting to that like witching hour, that 12:30 to 1:30, where the sellers come in and just blast us down. So don't be betting on this over here. Be concerned about this roll down as we roll into that 1 o'clock hour. Let's go back to the trigger screen. They're already trying to come in and sell you here. See right here, 10:30. This is like where they first try to come in. They're going to try to sell this down. Let's look at it two different ways. So you got sellers. They're going to try to sell you in here, right? They're going to take another stab at it as we come into 11. Look for some support down here. You might get one more into like this is 11:30 maybe. And then you start getting a lower high over here, or you know it by like 12:30 you're down into the right, into like 1:30, 2:30 in the afternoon, something like that. So just note that they're up here. They're trying to sell you here, and they're going to try to sell you here, and maybe you catch the all-time high, maybe. End of day. If vol control is here, by the way, we're not, and we got lots of time, don't we? Like we got till, way over here. Try to take us down here. That's a big ass drop. This is 9:30 over here. Here's the half an hour trigger over here. So, bam, bam. Maybe we get the all-time high right there. This is your best bull outcome, something like that. But the truth is, the ugly truth is, here's your half hour trigger, right? It's more something like that and something like this into the close. And then they get you on Monday, they get you the high. So there's danger here. Now, get rid of that for a minute. Just be aware of where we are. Fail all-time highs. Take you down here, and there's a shit ton of stuff to close up down here. So you're going to get sellers here. Sell, sell, sell. Also, let's look at hourly velocity. Still more room to run right now. There's a little bit more room on the hourly. There's a little more room in the half an hour. No, half an hour is getting a little long. A little long in the tooth in the half an hour. So, Velo is saying Velo here is saying one more pump. And the hourly Velo, which is we're at 10:57, right? You look for a dip buy at like 12 o'clock for one more time. So one more pump there, and maybe one more pump right there on the hourly at least. And then get the fuck out over here. Like a failure of all-time highs right here. So we'll play it by ear. As we come up into this resistance, and also 610, which is, hold on here. This yellow bar is the natural sellers right here, right? 610, that's R2. Where's 12 o'clock? This is 11:30. There's 12 p.m. You'll do an hourly check back. Try something like that. Maybe we get over it one. Maybe we get over it right there. That's 10 o'clock. Try that one right there. Half an hour has got more juice. Back down, check that 5-minute trigger right there. One more pump down into the half an hour trigger right there, which this half hour trigger should be up, up, up. That makes about, that's close. Maybe slightly lower. One thing I'll say to you is you have to hold this back test. If on any back test we start to lose it, game over for this stuff over here, okay? Game over, man. Note that there is supply up here. If you watch on Bookmap, you'll see it. Hold on here. What's going on, Bookmap? Come on. Fuck is going on? Oh, shit. Hold on here. I got Bookmap problems going on. Hang tight. I got kicked off Bookmap this morning. Oh, fucking A, man. Thinkorswim sucks now. That shit's been getting worse year over year. I mean, Bookmap, or not Bookmap, but Thinkorswim. I love Thinkorswim. I went down, you know, the thing about Thinkorswim is it's like Apple. Like once you go down the what the fuck is going on? Where's my face too? Hold on here. Sorry about that. I thought you could see me. like Thinkorswim is awesome if that's all you do is Thinkorswim. They're very much like garden. They're all about the garden. And the moment that you don't Jesus, what's going on over here, Bookmap? There we go. See it right there? That's better. That's better. That's good to see. That's sexy, right? So you got a target right here, and we'll try for that target later. You see that one? There's two targets there. Do you see it? Clear as day. So we got the first target right here. Bam. And then the second target up here. There's the all-time high. Whoop, right there. Could push that up a little bit. 610. Could say it's 6250, or we could say it's 61250. We'll be generous. We'll just all we want is above 610 for now, but you could possibly see 61050. I think you're just going to get the tip. Let's look at it like that. This is like worst case. This is probably best case, worst case. They're definitely going to try for it on the half. New high on the half an hour. Coming into 11:03, they're going to try to sell you down into 11:30. That's really what they want. They want a new low. But we do have some supply above over here. You can see it there and there. When we tag these two, that should be the local top. And they're going to keep trying to sell us down here, so we'll see what happens. Keep it just like that. Oh, nope, wrong. Nope. Come on. Oh, fuck, man. Just get that last little bump. There's your double top for your bears up there. There we go. That's a little bit cleaner. What else we got here? We just got another note here too. Dow Jones just got a new all-time high. VIX being murdered right now. There's VIX 9-day. DXY. DXY bottoming. Dixie looking bullish here. Just note that Dixie is looking bullish. We're topping right now. A little bit more murder of the VIX and Dixie strengthening. Dix. They're getting close. We're getting close. HYG is saying one more pump. We're getting close. We're not quite there, but almost. HYG wants some more junk shit. It's like a big squeeze in HYG, then a roll. And we held the 1 minute trigger. That's good to see. Trying to pump it up. Bears aren't winning this one, are they? Crank that bad boy up there. I'm trying to get that shit done now, huh? Woo! Bear rage right now. Call sellers coming in, selling a bunch of calls, handing off all those calls to the FOMOers. Very nice to see. All right, so back to GDP. Annual real GDP growth 2.8% was well above the 15-year average of 2.4, despite the highest interest rates the economy faced in decades, with short-term rates above 5.4% for much of the year. Real GDP growth, annual inflation adjusted, a pure indicator of private domestic demand. Final sales to private domestic purchasers as a metric that is part of the GDP report and tracks U.S. private domestic demand equals GDP less exports, less imports, less government consumption expenditures, less government gross investment, less change in private inventories. It covers about 87% of GDP. Powell mentioned it from time to time as a pure indicator of private domestic demand from consumers and businesses, which is what monetary policy is trying to influence. I want to warn you right now, if you are a fucking bull, get the fuck on out. You can leave a runner or two on. Do I have to be clear as day in this? If you are a bull, we are topping up here. Even if we squeeze, it'll be a fast reversal. We're getting close, getting a little bit long there in the tooth. Heed my warnings. Do not instigate new trades. You're here to take the money and run, okay? We're coming up here into some supply. We also have a call wall right here, just so you can see. So I want a big pullback here, but I want you to know if we squeeze up, if there's any kind of squeezing going on, it's going to be met with a big red candle. Okay, so if you see a big push, like wham, green candle, you're going to see a reversal. I think it's called tweezers. Candlestick pattern. So big squeeze, then big reversal. Powell mentioned it from time to time as a pure indicator of private domestic demand from consumers and businesses, which is what monetary policy is trying to influence. Adjusted for inflation, final sales to private domestic purchasers jumped by an annual rate of 3.2% in Q4, attesting to the strength of private domestic demand. The actual size of the U.S. economy, current dollar GDP or nominal GDP, not adjusted for inflation and expressed in current dollars, rose by an annual rate of 4.5% in Q4 to $29.7 trillion. This is the amount we use for the U.S. debt to GDP ratio. And it is fucking cranking. Keeping up with debt. Consumer spending jumped by an annual rate of 4.2% in Q4 adjusted for inflation, the fastest growth since Q1 2023. And the second fastest since Q4 2021. There are those out there that are arguing that we're in 2021. That's where we're trading right now. There's some like similarities to 2021. Powered by a huge splurge on durable goods, especially motor vehicles and recreational goods and vehicles. As a matter of fact, Larry Williams seems to think that we're in that, him specifically, thinks we're in that stage of inflation, which I think it really started ramping in 2021. And he seems to think the market is done on pretty much the first or second week of 2025. And he also thinks we're fucked. GS and some others think we've got one more year thereafter, depending upon presidential policy. He thinks that our GS seems to think there's like a lot of Trump rhetoric won't come true until the second half of his presidency. And he'll kind of come to the realization that he's done, and so he'll try to get all the stuff done at the second half of his presidency. That's where we get fucked, supposedly. This spending splurge on goods has been predicted by retail sales, which are sales of goods, not services, that have caused us to warn that the Fed needs to watch out amid strong demand from our drunken sailors. Quarter to quarter in terms of 2017 dollars. Listen to this shit. You're going to love this. Quarter to quarter in terms of 2017 dollars. Personal consumption expenditures, as they're called officially, jumped by $167 billion to an annual rate of $16.3 trillion in Q4. Do you know what that means? Do you know what that means? Do you know how to interpret that? What that language I just used was? Let me say that again to you. Quarter to quarter, in terms of 2017 dollars, personal consumption expenditures, as that they're officially called, jumped by $167 fucking billion to an annual rate of 16.3 trillion in Q4. What does that say? When people tell you today that they were better off pre-COVID, they're lying. They're lying. They just don't want to pay more money, but they're making more money, and they're richer and wealthier than they were back even pre-COVID. That is a fucking slap in the face of all the diarrhea that you read. All the diarrhea that you watch. All the diarrhea that you see in social media. All the crap. All the whining on socials. You bunch of fucking liars. No. We're talking same dollars. comparatively the same dollars, right? Even accounting for inflation. No. No, see, you're getting part of it right, but not the rest of it right. What's happening is people are they're nitpicking one piece of the data, but not all of the data. Do you get me? People are literally better off today, I'm say it to you again, than they were pre-COVID. And I know that sends people fucking flying. Gross private domestic investment dropped by 5.6% annualized and adjusted for inflation after 6 quarters of increases. This means that when you were being told that people were buying Rolls Royces and pissing their money away in Las Vegas and pissing their money away on zero dates, that wasn't what was going on. They were making a bunch of money. They were saving it. They were paying down their debt. They were changing jobs. Their homes became more valuable. Even their used cars became more valuable. People were literally able to buy a car used and then sell it for what they originally bought it for. And then the car market dropped and they were able to buy again for cheaper. That's how ridiculous this shit is. Now, this is kind of bad here. Gross private domestic investment dropped by 5.6% annualized. That means you guys are partying. So then you say you're not spending money, but you are. You're getting OnlyFans. You're looking at feet pics. You're looking at unshaven legs because some of you guys have some crazy-ass kinks. You're getting fucking IHOP delivered to you late night instead of cooking your own breakfast. That was a big hit to GDP, subtracting about 1.03 percentage points from GDP growth, of which, matter of fact, if I'm lying, this article's brand new. If you don't agree with me, and you're going to call me out in the show, go over here and tell this guy, and listen to what he responds to you. He'll tell you the same thing. Non-residential fixed investments, minus 2.2%, structures, minus 1.1%, equipment, minus 7.8%. Intellectual property products, software, movies, etc., plus 2.6%. Residential fixed investment, plus 5.3%. That's good. Gross private domestic investment, rolling a little bit. You guys are spending. Government consumption expenditures. So look at this. They're going to try to take you down now into 11:30 here. They're trying to get you down into. We'll bring this one back here. They want their blood. They're trying. They're like, not over here, Cap. Over here, bro. I'm going to try to get you down in here, right? Get that new low and then down in there. So they're going to try to hit this 1 minute trigger. They're trying. Still no new low yet. You got to get a little bit lower here. So fucking drunken sailors. Bunch of fucking drunken liars. Combined 2.5% annualized and adjusted for inflation, the smallest increase since Q1. Combined federal, state, and local government consumption and investment accounts for 17% of GDP. State and local governments account for 61% of total government spending. The federal government accounts for 39% of total government spending. This does not include interest payments, and it does not include transfer payments, the biggest part of which are Social Security payments, which are counted in GDP if and when consumers and businesses spend these funds or invest them in fixed investments. State and local governments plus 2%, federal government plus 3.2%, national defense plus 3.3%, and non-defense plus 3.1%. Government consumption. Now, here's where we got a problem here, okay? This is where we got a fucking problem here. Now, here's where the problem comes in. Government consumption expenditures and investment, federal, state, local, trillions and trillions of dollars, 2017, SAR, inflation adjusted. The trade deficit, net exports and goods and services remained at near record levels, essentially unchanged overall. Exports, minus 0.08. Goods exports, minus 5.0. Services exports, plus 7.2. Exports subtracted 0.08 percentage points from GDP growth. Imports minus 8, minus 0.8. Goods imports minus 4. Services imports plus 12.8. Driven by American spending overseas in the ongoing travel boom. We talk about that here, right? You guys have heard me on the show say to you that it's cheaper to literally go skiing in Europe than it is to go skiing in the United States. So travel, you guys are traveling. Cool. You guys, show me the pictures. I think I got a friend that he just booked a trip to Greece. He just booked a trip to Greece. So people are spending money overseas right now. Lower imports contributed 0.12 percentage points to GDP growth. Net exports minus imports remained at minus 1.0 trillion. Trade deficit, net exports. Oof, that looks ugly. That looks as ugly as it looked in the bottom of 2022. The debt to GDP ratio worsened to 121.8% in Q4 as the gross national debt in current dollars, not adjusted for inflation, ballooned by 2.0%. We got a new lower coming into in the half an hour here. They're going to try to take us down now to 608.92 into the 12 o'clock hour here. So be careful here. They're going to try to blood us here. They're taking a stab at it again. I'll read that again to you. The debt to GDP ratio worsened to 121%, 120.8% Q4 as the gross national debt in current dollars, not adjusted for inflation, ballooned by 2% from the prior quarter to 36.2 trillion, while current dollar GDP, not adjusted for inflation, grew 1.1% to 29.7 trillion. The spike in 2020 occurred as GDP collapsed during the lockdown, while the gross national debt jumped on the government's free money giveaway spree. They should have put out 100 fucking year bonds on that shit. I don't know why they didn't do that. I don't know what the fuck is going on. And the debt to GDP ratio, which is the danger, if you want real danger to like the markets and our economy, it's not the one true danger, but it is one that we have to look out for. And not only that, we have to look out for policy from Trump. And then do we get downgrades from like Fitch, Standard & Poor? And this is the whole, I want to talk to you about this briefly here. Why is debt increasing? Do any of you know? Do you forget? We had the largest in history election seasons around the world in like total for like presidents, PMs, like whatever the dictatorships, whatever they want to call themselves, and also surrounding government positions. So elected positions in full government, it was the largest on record last year. What happens in major election years? Do you know? They don't care if they're right wing, left wing, center, far left, far right. They don't care. Our elected officials in the world, or fake elected officials, or even dictators that reappoint themselves, when it comes time to have those elections, they spend. So they get reelected. So we had a party last year. Remember last year when everyone is saying we need to tighten the purse strings, right? You should vote for me. This was around the world, right? In reality, well, as they're saying that, they're also spending because they want the votes to remain in power. So our GDP to our GDP to debt ratio was cranking last year. Even if they're promising you they're going to cut, they partied. Now, the bigger question as we come into 2025 is that, hey, what's your real policy? Right? We know what you stumped on. That's one whole other thing. We also know that you spent while you stumped. And now we want to know what your real policy is. So think about it like a toga party while you're electing your fraternity's president, right? Then the president's like, I'm going to do this, I'm going to do that. Here's a beer for you. Here's a shot for you. Let's play some beer pong, right? Now we get into how much do we have in the kitty, right? And we're like, what are we going to do? We're going to party still, or are we actually not going to party anymore? And so the first 100 days around the world of all these elections, no matter who wins, you've got bond vigilantes and you've got ratings agencies that are like, okay, did everybody get elected? Okay, you're all elected. What's the real policy? Let us know, because we're watching this GDP to debt ratio in all of your countries. It's not just the U.S. Remember that. You got to remember that to have a market crash and a bear market and oh yeah, look at that. Oh yeah, send it down, baby. Send it down. Give me a new low down here. Hot sauce. So remember that as all of these governments are formed, one way or another, whatever process that they use, then you've got ratings agencies that are like, okay, what's really going to happen? And they did reiterate, Fitch and Standard & Poor's, like, everything looks okay right now. We'll wait and see what real policy is. So as we come into this new year, and actually it started late last year, like October, November, around the world, and also now the United States, they want to know, hey, we know you had a horrible thing with COVID. We know you've been spending to get elected. Now we need you to button it up and tighten it up, right? So this year, you want to be paying very close attention, not just rate hikes, right, and the Fed and all that stuff. You want to be paying attention to who's tightening and who's not. You want to be paying attention to these are the countries of the Paris Accord, right? Or not the Plaza, not the Paris Accords, the Plaza Accords, right? You want to see like, hey, is Japan tightening or not? Right? You really want to know this stuff. There's big discussion right now about Japan, BFJ's next rate decision, right? The U.S., what are they doing? Are they tightening, right? Is GDP okay? Are they spending less, or are they spending more, right? Because that stuff will matter, right? You start getting downgrades. You start getting budgets that are out of control because we don't have a budget for the rest of the year, right? You know that if you're a government worker right now, a bureaucrat, you know that any promises made that they're going to pay you for 9 months is bullshit. We don't have funding for that yet, do we? So you're going to be all eyes on that stuff this year too, which is, are we going to keep spending or not? That could become more pertinent as if you see other countries that are tightening the belt, if they flip themselves into, let's say, recession. So let's say Japan starts to tighten or Europe starts to tighten. If you start hearing whispers of like, oh yeah, Europe's going into a recession, Japan's going into a recession, U.S. is going into a recession, right, or near sometime soon, you worry, right? When you go into these big downside moves in our markets, usually you need other people participating, other countries. It's not just the U.S., it's other countries too. You start to see world recessions and you start to get really sketched out here, don't you? You should be if you're not, or if you don't understand this stuff, yes, you should be. I'll just let you know right now. New low right now on 1130. So you're going to see the market here try to blast through this, right? They'll let you back up, and then they're going to try to slam you down right here into 12 o'clock. That's the plan from the sellers, okay? Those call sellers, put buyers, and they're going to try to take you down right here next, okay? So do it like this. And that's their plan right there. Oh, right there. The spike in 2020 occurred as GDP collapsed during the lockdown while the gross national debt jumped on government's free money giveaway spree. And that's the baddie. Like that's the if you want the bad news, that was it right there. Right? That was it. What else we got here? Let's see if Richter said anything. This one guy called Dr. T-Bond. He says, Wolf, I saw a stat. Now, listen closely to this, okay? This guy probably got this stat from FinTwit. Wolf, I saw a stat that I was curious of what you make of. Nominal GDP is plus 1.4 trillion. 4.9 trillion year over year. Treasury debt outstanding is plus 2.2 trillion, plus 6.4% year over year. Wolf's response was, number one, you're comparing apples and oranges, and you get bullshit. Number two, a lot of the money that government borrows and spends doesn't go into GDP, including interest payments. Number three, I discussed some of that in the article. That's the one that I just read to you. Number four, including debt to GDP ratio, which shows the burden of debt on the economy. Don't drag trash that you pick up on the internet into here. Instead, RTGDFA. I'm not going to tell you what that means. You can look that up on your own. Then they want to talk about the stupid reporters. The gotcha questions the reporters were looking for. Oh, man. Oh, sorry. I'm reading some of this stuff in the background. Read the goddamn fucking article. Oh, I fucking love it. What's the multiplier effect of domestic funding? I suspect that the lion's share of those dollars go to China companies. What a pity we no longer have much of a base economy. Richter says the U.S. is the second largest manufacturing economy in the world, larger than the next three combined. The problem is that the U.S. is not the largest, but ranks second, far behind China. We got the new low off of 11, but not the new low off of 1030. This is holding for right now. You might go up here. Let me look at a 15-minute. No, it's still lower. It's still down here. I had that wrong too. I moved it earlier by accident. I was dicking around. If we fail this, so just right now, if we fail right here, we're going all the way down here, downtown. Look at that thing. The thing looks like I got a little arrow down there. Looks like I got a little bent peepee or something. Pay very close attention to these gray boxes right here, because this'll send us like moving to the downside. There's a bloodbath coming up here. And we got the new low here, so watch out to the downside here. If you're looking to, yeah, there's nothing down here. Not only that, but if you wanted to instigate a new long, you would need to see price break up and then back down before instigating it right here. So don't even fuck with this. Don't be trying to buy that dip at all. Wolf does make a good point there. He says, so NR goes, this guy goes, what do you think the primary reason for a fall in domestic investment? I haven't even read it yet. I think people are realizing gains. I'll be honest with you. It looked like the housing market came down and bounced in a lot of markets. The markets that didn't are right now. And car market started to bounce. Not only that, but there's a lot of like consumer spending habits that have shifted through COVID. It's like people bought, I'll use this as an example. Like, let's say somebody bought a couch and a TV during COVID because they were staying home. It's been like 5 to 7 years, when like 4 years, you're like, that couch is getting kind of rough looking. That TV, it's not an 85-inch. Those have come down now, that kind of shit, right? And then we started to get a bottoming in pricing, bottoming in inflation, wages catching up, that kind of stuff. And people are like, we just had 2 years of a good bull market. Let's go out and spend some money, right? So that's what they're doing. They're drunken sailors right now. That's what the data is saying. So they're not saved. They're no longer saving. They're spending on goods and services. So Wolf goes on to so NR is saying, why aren't they saving? Basically, why aren't they saving anymore? They paid off their college loans. I know they tell you they didn't, but they did. They bought a landscaping company. They replaced a truck for a roofing company. They did all the shit they're supposed to do. So what do you think is the primary reason for a fall in domestic investment? If the demand is booming, why is there a pullback in investment? What do corporations see in the future? And Wolf says, it was a 1-quarter dip. If you look at the chart, they're not uncommon. So maybe this was a sign that companies were waiting for the election to be over with, right? What happened leading up into Q4? Joe Donut, one of our partners here, right? What did he say was happening? Do you guys remember what he said? He said, people are scared of the new administration and inflation and tariffs and all this other stuff. So what are they going to do? They're also afraid they're being told on socials that we're going into a recession or stagflation by Fed policy. This was in Q4 of last year. So everyone is afraid, right? As you put in your orders, if I make pencils, if I'm a buyer for a company, and this is middle of the summer of 24, so I sell pencils, right? And I'm like, okay, I'm being told we could go into a recession, right? I'm being told that we could go into stagflation. So what would be prudent for me to do heading into buying pencils for 2025? I'm going to slow down buying pencils. I have a bunch of inventory. If we go into a recession or stagflation, I'll be praised by my CFO and my CEO for having not been stuck with all these pencils for 2025, right? If we don't head into stagflation or a recession, I'll look like what? A rock star. Why? Because I bought less pencils, which in turn will raise the demand and price for pencils if we escape stagflation or a recession. So I can raise the prices of pencils now because I didn't order enough. And what are we seeing right now? That knock-on effect, right? Inflation rising. And then we have fear of tariffs, whether they come true or not. I don't care as the guy that sells pencils, because you're afraid I can also raise the price of pencils. What does that effect have on the stock market? When you come into Q1, Q2, Q3, if we're not in a recession or stagflation, you should see what? Record profits. I didn't buy pencils. I had less to sell, and I could charge more for it. So I'm making more profit. Maybe my revs are down because I'm not selling as many pencils. I don't have as many available, but I'm able to make better profit margins, right? I look like a rock star. No matter what, I look like a rock star. So that buyer in mid-24, or 24 goes to put his final orders in, Joe Donut's in this business, right? And what do his buyers tell him? Yeah, you know what? We're just going to wait and see. Right? So you've got a dip here with consumers that are taking their money out. They're not saving it, and they're spending. So consumer spending is up. You have corporations that are saying, we're not going to buy any more pencils. One way or another, we're either going to be safe for 25, and we're also going to make a lot of money. So you as a stock market participant should be expecting what in Q1 ERs and Q2 ERs this year? If we're not in stagflation and a recession, you should be expecting some good fucking ER reports, right? That's right. And where are all these people, all these consumers, what are they doing? They got money. So what are they doing? They're loading up on NVDA. Who's spending money right now in Q1? Who are the flows coming from? Retailers. It's all retail flows right now. They're just buying the fuck out of the market. Give me some NVIDIA. Give me some SoFi. Give me some GME. Give me some of this. Give me some of that. I'll take all that shit. We got one more pump left in the economy. I know this turns bad, by the way. If you don't believe, I realize this shit doesn't end well, but it's just part of the cycle. So it was a 1 quarter dip. If you look at the chart, they're not uncommon. So maybe this was a sign the companies are waiting for the election to be over with and the new policies to shape up so that they could take them into consideration, including what? Tax considerations, right? Are we going to sunset that great tax plan? And let's talk about that even further. Does it matter what the actual tax plan is? Trump's out there right now telling people, I'm going to fucking get rid of the IRS. I'm going to get rid of income taxes. I'm going to drop your tax burden lower than it was when I passed that law in 2017. Does that real? Who the fuck cares? It's party time, baby. You're telling me I'm going to save even more money on my taxes? Of course, my county and state are going to come after me for that money. You never escape that shit, but I don't care, right? I'm saving more money this year. Woo, Trump's in office. Hell yeah, baby. Let's spend money. So maybe this is a sign that companies are waiting for the election to be over with and the new policies to shape up so that they could take them into consideration, including tax considerations. Note that these are investments after they're made. Not when the decisions are made to make those investments. So there is a lag. Slowing QT was de facto QE. Can anyone be surprised? The Zero Fox contingency is still on a spending spree. Wolf Richter goes and says, that's internet BS that you stepped into somewhere. Love it. Oh, boy. Outstanding. Hey, there's another article here about housing. I'm not going to read that one to you today, but if you're watching the housing market, I watch the housing market. There's some updates. There's like rotation going on right now in markets. So like some major markets have already rolled down. Some other ones were topping. Now those are rolling down, where the ones that are already rolled down are beginning to turn up again. So maybe we can like, if you were to look at a chart of like the housing market, it's it's not bad, it's not good. Haven't quite rolled over the economy yet, but it's getting there. It's getting long in the tooth, just not yet. So we're getting all bared up out there. I don't think your timeline might be the same as the economy's timeline. It's there. It's just not there just yet. So you want to be looking closer to end of year, maybe even part of 2026, possibly. Could be a process that takes time to where it does matter. Pay close attention to the ratings agencies. Pay close attention to um, policy from around the world. Pay close attention to recessionary environments outside of the United States. Pay close attention to Fed policy in our country as well. Of course, inflation, unemployment, that kind of stuff. Any kind of velocity and major data points, pay attention to that stuff. But none of that stuff is it's turning slowly, but it's not there yet. It's going to take some time to get there. And it'll take some time for them to front run that too. It'll take time as well for the money to leave the market. It seems like they're not doing that yet, but we should watch that velocity slow as we head into end of this year and into next year. What else? That's all I got for you from Wolf. Oh, sweet. John L's awake. He's saying $40. He could start you on $40. He said $40. So that's cheap, right? You don't need 2,500. You don't need $1,000. Some of you say that you don't have $1,000, right? You have less than $1,000. So hang tight here. Watch out for that bloodbath. So if you don't have $1,000, right? You know, $1,000. You're going to be able to follow along with this. You're probably selling cash secured puts, I'm assuming. That's what I would assume that you're doing. Or maybe he's not talking about, hold on here. Maybe he's not accounting for, does that account for something about Russia? Hopefully, got some people reading this right now, and for the question, the Q&A going on. We have interest in ranges from under $1,000. We're checking here a bear plane on the 1 and 5 minute trigger. See the cross happening right now. Looking for the new low into the 12 o'clock hour. Can you guys see all this? Move this over. Are we able to get this? It's one last pump up here. Also down below, let's take a look at SPX Gamma. Note here that we're back testing, right? I don't know if you can see this, but is that better? This is where that support resistance line is right here. Back testing the 5 minute trigger on SPX Gamma. If we're going to make another pump higher, we want to be able to hold this to get above, right? And if we don't hold that, what do? Straight down, right? So this translates to, do you see this green line right here? This is the, it's not Gamma flip, but this would be the 6100. So if we're able to hold on, to this, right, we go up, right, to try to trade the gamma bar. That's at 61.65. That's the all-time high gamma bar up there. What you don't want to see, watch this closely with me, okay? What you don't want to see is like the bloodbath down. Like you can tick this and move higher. What you don't want to see is the break and then a rejection. If we get the break and rejection, what happens is right here. If you get the break and rejection, if we like go down here, right? You make the new low and it's straight down. You should be Johnny on the spot in there. This is a juicy high percentage trade for the downside move, okay? I gotta go pee. Pounding water. So we're paying very close attention in here. It would kind of look like, now if we hold this, we're good. If we hold this, good to go. But if you see like a break below a bloodbath, that's bad news, right? This is where, that's like Johnny on the spot, drop fucking 50 points. Not quite there yet. And remember, like, this is on up and downs. You got to be very careful on this stuff. Or I've talked about this a lot. There's a lot of like new people. So, like, your wick is damage, but it's not like what a lot of traders. This is up and down. Doesn't matter. Like you get the damage trade, right? But it doesn't necessarily mean bearish or bullish. You get the top wick. That's not always bullish, right? We roll down, right? You need to see that new low. You see that new low, you're already waiting with like you're slamming your triple leverage puts and shit like that, like bam, 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 right? But you need that second roll. You need the capitulation by buyers or the capitulation by sellers in the inverse, either way. So watch this closely. If they can't get these new lows and they can't get the first new low nor the second, do you know where we go? We go all the way back up. Whoop. Up here. So watch this price action closely. There's a Trump presser at 3 today. Easy, thank you. Hey, Easy, thank you for saying that. Note to you out there, if you're trading futures right now, we have a Trump presser at 3 p.m. We gotta write that in here. Where's 3 p.m.? 2:30. Trump presser. Just a note here. There's a Trump presser at 3 p.m. Probably a good time to not be long or short if you're trading futures or any kind of margarine. Trade the reaction. Positive or negative, doesn't matter. Trade the reaction to that trade. Just trade the reaction. You don't need to pick it. Just go hands off around 2:30. Fucking, if it moons, sell it down. If it bloodbaths, buy it up. Unless it's something truly crazy. And I don't mean crazy negative either. It could be like we're launching this cool new thing. And this could be on anything. Like you're like, oh, I'm long on Johnson & Johnson right now. And Trump happens to come out and say, fuck Johnson & Johnson, or I love Johnson & Johnson, and you're short on it. And you just get run over, especially on margarine. This is nice to see here. They did get the new low down here. Still not out of the woods. They did get the new low, technically, from this one right here. But the bears are weakening. They got a little bit more time, so be patient. But if we get a new high right here, they're gonna run this fucker straight up. Okay, just did a little bit more time, a little bit more patience here. Could also be a death candle. What the fuck are you guys talking about? New tariffs on powder? I would assume he's gonna. Does anybody know what he's gonna talk about? I'm gonna assume he's gonna address tariffs. Let me see if I can see anything. I don't see anything on Truth Social. I will say this though on Financial Juice. JP Morgan said our base case, listen closely here, all you bears out there, JP Morgan coming out just now and saying, hold on me. Let me post this. JP Morgan saying just now, or a little while ago, our base case is for tariffs to be postponed. Meanwhile, there's like all kinds of shit talking from Canada, Mexico. U.S. we're talking a bunch of Panama stuff right now. It is best for Panama to find a solution with the U.S. and the canal for its national security and trade. Well, hold on. Well, there is a lot of discussion. Very important moment. Chat testing right now. 6100. This is what the Bulls need to stay alive, is to stay here. I'm thinking about getting a trade here going. I shouldn't be doing this on a Friday. Like just one more pump right here. The old Trump pump. That bad boy right there. This is support right now. Half an hour trigger just below it at 607.18. Watch out for the plunge. Find out if plunge protection team shows up or not. Vol control gang, are they here? Or are they gone for the weekend? They wrapped it up. Let's see here. What do we got here today? Calls are cheap. 611s are 15 cents. They're saying, fuck you, though. We're never printing those. We ain't never printing 611 today. We don't give a fuck what you think. I agree with that statement. Basically, they're telling you 611, no go. Even if you got 611, they're going to be worthless. Even if you get up there, don't be trading 611. If you're bullish here, do not be trading 611s. They're going to take all your money. And even if you were going to get into them, they'd have to be at like 4 p.m. or like 3:40, 3:50 or something. Do not fuck with those. They're at 15 cents right now. They're like worthless. Even if there was a Trump pump. The 610s and 609s are more in line, but 609s are way too expensive. 74 cents, way, way, way too expensive. They should be like 40 cents right now, 30 cents. So don't be messing with those just yet. Oh, here we go. Thank you for that. Ooh, look at that. Look at that wick. Woo! Look at that fucking wick right there. Demand, baby. Are the CTAs here and the COTs here? Are they buying every dip? Is vol control here? Well, fucking well. I'm not buying it yet. That wasn't me. That wasn't me in a low volume Friday. But there is a little wick there. See it? Right to the tick down there. Right there in that this is the 15-minute tick, by the way. Woo! Almost a near perfect tick strike right there. Look at that. There was a little reaction there. Little pumperoonie going on. No, I noticed that. They went from like 15 to 16 cents. I noticed that. I'm watching it here. I got the chain open. I'm thinking about buying something. I'm ready. Oh, they're 19 cents now. They were 15 for a minute ago. Shit, that's a fucking 25% trade. 2 minute 3-bar pump. I'm getting all hot and bothered here. Yeah, I know it's White House. Is it did they any discussion what the executive orders are going to be? Is it like tariff executive orders or is it Okay, here we go. I got data. Hold on. Here we go. Trump is expected to announce a process for countries to seek exemption for certain imports. Yeah, baby. We'll talk about that in a minute. U.S. administration official Trump reviewing details of tariff plans, which may allow some exemptions, but they will be few and far between. Few and far between. This is bad, by the way. This is negative. If you don't know, this news that I'm telling you here is negative. So watch out for the roll down. Trump expected to announce a process for countries to seek exemptions for certain imports. U.S. administration official Trump reviewing details of tariff plans, which may allow some exemptions, but they will be few and far between. Trump expected to issue tariffs against Canada and Mexico that will begin on March 31st. Sources familiar with the planning are saying. Trump also saying, if you want to fucking make a deal, my office is open. I'm not seeing anything on Truth Social. Punch Bowl. Not seeing anything in Punch Bowl right now. Here we go. U.S. administration official says Trump reviewing details of tariff plans, which may allow some exemptions. They'll be few and far between. Hold on, we got more. Trump expected to issue tariffs against Canada and Mexico that will begin on March 1st. Sources familiar. That's a repeat of all repeat of financial juice stuff. Fucking tick strike down there. If you want to invest in DJIT tech company. Hello, good sir. Would you like to invest in the new Donald J. Trump tech company? We might be able to work something out on individual products from your country. This is my man Tim Apple over here. He's sucking on the ring right now. That's right. You got it. Everything's for sale, baby. You got it, sneaky CDN. You know exactly what's happening, right? Andy's giving them an out. This is all somebody's at the art of the deal. he's like we're gonna hammer you. We're gonna hammer you, right? There's a way to get out of it right now, and if you decide you're not gonna play ball, we'll give you a cool down period until March 1st or March 31st. like the crazy part here too is like Like that's one of my big questions is like, do you make all these business deals and shit, and then the ass end of your presidency is when you do all your promises, you know? And that's how we get that top of the market. You get that 1929 style crash. It's wheeling and dealing for the first 2 years, and then we come back and say, hey, we did everything you wanted us to do. Here's JD Vance. Let's give him the presidency as the shit's burning. Exit stage left. Man, you can like see the writing on the wall for all this shit a mile away. Remember that. So right now it's 12:16. Be careful of like risk offish behavior or just no volume in the market between like 12:30 and 2:30. And awaits Trump's tariffs. Okay. The market is going to hedge. I'm going to show you something here. So let's talk about this upside move here. Do we get the upside move? Probably not. We know that Trump is going to be speaking at 2:30 right here. So here's the Trump presser, right? We might, but just hold off here. Bear with me here for a minute. You figure there's a Trump presser that was just announced, right? So they're going to try to hedge this in, right? They're also going to attempt to get a print on that doom and gloom. And if the presser is good or whatever, they're going to front run that volatility, right? Regardless of outcome. I think that's the attempt here. So we can change our opinion here. Give me a second here. We can change our opinion if we get a new high, but hold on here. So just right here, you see this, like, see that right there? Right there. So we're going to go back to a 1 minute. Do I have that right? Let me make sure I got that right to the tick there too. You guys get all weird. Right there. Okay. Go to a 1 minute chart here. Now, this is what I'm going to say to you here, okay? We get rid of this one. I got a lot of trash in the screen here. Just too much shit going on. So here's that one right there. There's Trump pressers at 3. Yeah, right. Sorry, I can't read shit. I'm getting old. I'm becoming an old fucking man. So what you want to be thinking about here is this. More importantly, what you want to be thinking about is this, okay? Which is, do shorts come in trying to front run volatility into Trump's presser, okay? That would be the thesis. If price is able to break out above, we'll consider longs again, only if we get the high tick in a successful backtest. That would be the 1 minute trigger coming down and up, and we'll get the squeeze higher, that trade we wanted. This like one more high trade. You can't take that trade on unless we squeeze above, okay? So for now, the next 15 minutes or so, or the next until 12:30, we're going to watch price action, okay? Still no bull trade here. I'm telling you, there's no bull trade here. You got to be above this yellow box right here, okay? So for right now, the way is lower. We're going to pay very close attention to this here. Here's the sellers again right there. If you want to pick up a new long, you would want to see the new high to get long, okay? And there's a trap in here too. There's a fucking trap in here. Like, even if there's another bull trap in here. Be very careful in here if you're a bull. Because there's another one right there. Can you see it? Right back down there. And you got the high, the lower high, and then down. There's a lot of danger in here for bulls. I'm going to be honest with you guys. Be extremely careful in here. There's a lot of traffic for bulls in here. I don't like this at all, this setup. Yeah, right there. There's still like there's still like traffic in here. You got the high, the lower high. I don't like it. That's me though. Watch that closely. Congratulations, Gail. There's like fucking traffic here for bulls. Yeah, in and out, Gail. In and out at every pump. Let me make that bigger. You can see it. All right, I'm gonna take a quick break. I gotta go potty. I've been sitting here for I've been pounding water and coffee all morning. It's 12:30. Been sitting in the chair here since 9 o'clock. It's been 3 hours. I'm gonna lose my kidneys or something. So give me a quick break here. I'll be right back with you guys. Oops, sorry about that. I hit the wrong button. Chat went away. It's back on again. Also, watch this book map up here. There's a couple targets higher. See that target right there? This one right here. Watch my cursor up here. Bomb ahead. See it right there? There's a little bit more room above. That's the yellow bars right here. That's this one right here. We're gonna squeeze tits off here. Big squeeze coming. They could get it right now too. They don't have to wait for 130. Coming back here now, guys. Okay. We're going to take a look at some. I don't think I should say this publicly. I don't know if I should or shouldn't. Maybe too many fucking people. I gotta do this in a private stream. I'm not doing this shit in a fucking public stream. I'm gonna do this shit in a private stream. I should end the fucking show early today. Should I might shut the stream down to do a private stream for members. I haven't made a decision yet. I got a trade here for you guys. We were talking about it last night. Or we've been talking about it. I shouldn't say last night, but it's been something that's been discussed now for a period of time. Is that Chaz? Is that you, Chaz? Is that Chaz? Hey, Chaz, if that's you, give me a call, man. I gotta give you a fucking call, dude. If that's you. Is that actual Chaz or no? There's a trade coming up that I don't want to fucking blab. It's like blabbed everywhere. It's too many fucking people, I'll be honest with you guys. Being serious. Is it really fucking you? Chaz, dude. I'm gonna give you a shout tonight. Can I give you a call to hang out tonight? Chat. Dude, I gotta come. I've been meaning to come down to fucking Florida, dude. Like, I gotta get there. Like my wife keeps talking about going to fucking. I got friends down there, like Tony Saporito. I got like people I gotta go see in Florida, and I gotta see you too, of course, motherfucker. I'm gonna give you a shout after this show today. All right, here's the deal. You guys are gonna be pissed at me. Here. Yeah, David. What's going on, brother? Oh, David was, dude, what's up, my brother? We gotta talk about yeah, we get the second hedge. There's like that's a little hedge. We get a small JPM hedge. We're gonna take this shit private. We're gonna do it today. It's important that we do it today before fucking close. We're taking this shit private. I'm gonna do a private stream. Put a link inside the fucking Discord for fucking members. Fuck this noise. And no offense to you if you're not a member. I get it. I'm saying it because I got to talk about this trade before the close today. And I got to take care of members. I got to do it. The fucking GOAT David AMS, baby! We've been talking about you here around here. We've been looking for you. We knew you took a vacation. We're all like talking like, where the fuck is David? The GOA motherfucking T. I gotta do this. I gotta do this today. It's a very important. It's critical for like a big trade. So I gotta do it. I don't want to do this, but I gotta do it. Like, I have to do it. I gotta fucking do it. It's $20. Ask me for a fucking refund. $20. It's not that expensive. It's fucking. I gotta do this. I gotta do this for my community. I apologize for this today. How about this? If you're a free member and you're watching the show right now, I'm gonna give you guys an outlook at least. Okay. This is what I'm gonna tell you if you're. This is sexy. I'm going to tell you guys something. We held this support. We held that support, but I'm going to tell you here. This half-hour trigger, this hourly trigger, this is your fucking jump point right here. 607, 606. If that shit comes down there in this presser, unless it's not that bad, just anytime it hammers it, you're buying it. I think we get hemmed in up here. I don't think you get an all-time high today. I think it's going to take 2 or 3 sessions. But once it breaks out, it's going to fucking moon. But I got to talk to some people right now. I think I got to do this before the close. Let me just check with the Discord and see what they think. Not yet. I'm not going to stop the stream yet. Just hang tight. I got to talk to the Discord, okay? Let me just get in the Discord really quick. I'm not asking. No, hey, it costs us money to do this shit. The fuck you think it costs money? Fucking, what do you think this shit's free? Like I sit here all fucking day long. I got to pay for fucking bots every month for free? Shit costs me thousands of dollars every month. You think I'm fucking making money? What the fuck is wrong with you? I got fucking paid bots in there. Cost me thousands of fucking dollars.